I think it's really important to be honest with the audience about this story because it's been a multi-week thing with Nvidia. What do they mean by produce $500 billion worth of AI infrastructure, Brody? And what we're talking about, I think, is assembling this system that they called accelerated computing, not just the fabrication of key chips.
That's a very important point. Yeah, I mean, electronics more than any other good really come a bit from everywhere, right? You buy a component from Vietnam, from China. In NVIDIA's case, I'm not certain, but it's coming from all over the world. And likely what we're speaking about here is some of that kind of later stage manufacturing assembly. NVIDIA isn't 100% clear in this, but what we know is that in recent weeks and recent months, there's been a lot of pressure for large companies, large tech companies to speak about how we are investing in the US. If tariffs come, if supply chain disruptions come, we are ready. And so that's kind of what NVIDIA is messaging today, that they are ramping up their production in the US, they will have capacity here, and they will make up to $500 billion worth of goods here in the US.
Just very quick, in Texas, who are the manufacturing partners?
Yeah, they're pairing up with Foxconn, Hanhai there in Texas. And so, I mean, essentially they are, it's kind of a who's who of the companies that are doing manufacturing. For Arizona, it's going to be TSMC and their big Phoenix campus we've heard a lot about.
Over the next 4 years, chipmaker Nvidia plans to produce up to $500 billion worth of AI supercomputers in the US. As it works with international manufacturing partners to set up and run cutting-edge production facilities, the project is reportedly the first time the company's AI infrastructure will be entirely created in the US. Jensen Huang, the founder and CEO of Nvidia, stated, "For the first time, the engines of the global AI infrastructure are being constructed in the United States. Adding American manufacturing improves our supply chain, increases our resilience, and helps us better satisfy the amazing and expanding demand for AI chips and supercomputers." The business has put more than 1 million square feet of manufacturing space into operation in collaboration with Siliconware Precision Industries, Foxconn, Wistron, Amkor Technology, and Taiwan Semiconductor Manufacturing Company, TSMC. NVIDIA's newest AI technology, like as the recently released Blackwell chips, will be designed, produced, assembled, and tested in these locations. NVIDIA's Blackwell chips are now being produced by TSMC at its fabrication facilities in Phoenix, Arizona. At the same time, Texas is developing supercomputer manufacturing facilities, with Foxconn spearheading operations in Houston and Wistron in Dallas. Within the next 12 to 15 months, mass manufacturing is expected to start at these Texas locations. NVIDIA is improving its testing and packaging skills in addition to chip production. Amkor and Spill will manage these procedures in Arizona, meeting the intricate needs of the production of AI chips and supercomputers. The corporation anticipates significant economic gains in the United States as a result of the shift. Over the next few decades, the chipmaker estimates that building a domestic supply chain for AI supercomputers will boost the resilience of the nation's vital technology infrastructure and generate hundreds of thousands of new jobs. Additionally, the company intends to use its technologies, such as the Isaac GR0T robotics platform and NVIDIA Omniverse, to automate production processes and optimize facility architecture. Digital twins of factories and robotics-assisted activities will be made possible by these instruments. The infrastructure created is meant to accommodate what NVIDIA calls AI factories, data centers built especially to handle workloads related to artificial intelligence. In the near future, tens of these gigawatt-scale facilities are anticipated to be built, serving as the foundation for an expanding AI-driven sector. Reports about NVIDIA's intentions to purchase Lepton AI, a business that specializes in leasing servers with NVIDIA's AI hardware, first appeared in March 2025. Verdict, a company owned by Global Data, was the original creator and publisher of the article, NVIDIA to produce up to $500 billion worth of AI supercomputers. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Out, maybe you can help us understand it, is NVIDIA. Right now they're going to build chips and AI platforms here in the U.S., so certainly tariffs aren't going to be relevant for them once that's up and running in a year. And yet the stock is barely up today, maybe 0.5%. Can you help us understand why NVIDIA isn't up more?
Yeah, I think NVIDIA has a lot of other things going as well. There is this suspicion that AI has run its course, things like that. Maybe people have already got their chips already. So things like that. Then we had DeepSeek, and there's some alternatives to NVIDIA. Maybe you can do things cheaper and faster in some other ways. So that total dominance of NVIDIA is being threatened, though I don't believe that. NVIDIA is still the major player. You need them for everything from robotics to cars to everything else. They are the core piece of all the things that are going on or that are coming down the pike. So I don't think NVIDIA is at risk, but on the face of it, I think there is a risk. There is that feeling that maybe it's not smooth sailing. They're going to they need to do some reinvention and be ahead of the game. So there are some challenges ahead. So they had other issues going as well. And NVIDIA is playing the tariff game pretty well. They're well positioned. They're already in Arizona, and they agreed to spend 500 billion. I think that's great as well. So I think they're doing the right things. So I think they're okay. But overall, I think AI, the whole setup around AI is kind of not as smooth as it was before.
Santosh, I'm curious, as you roll into earnings season now, and we start hearing from these chip companies, do you think, Santosh, we're going to hear from chip companies, they're going to tell us a lot of their chip customers stocked up on chips, kind of pulled forward demand ahead of those tariffs?
Yeah, we're going to hear some of that, a lot of it. We don't know exactly, but I think definitely that was the sign that people have pulled forward. And even from China itself, and a lot of things happened there as well in terms of pulling forward and all that stuff, in terms of the export-import imbalance there. So you are going to see some of that. But I think fundamentally, I believe that AI has still a long ways to go. There is tremendous demand. Maybe there's some reorder in terms of who's leading it and who's not. And maybe the competitive landscape just got wider. But overall, AI is needed, and the companies that play it well will do well. And NVIDIA is right there in that whole space, though they'll have company going forward.
Any investor may feel uneasy due to the recent market turbulence. When the value of your portfolio declines in tandem with the market, volatility can be frightening. It can be an opportunity for individuals who maintain composure and keep their attention on the underlying company. Some stocks have soared to nosebleed prices in the past 2 years due to the bull market. Although Nvidia is a well-known brand, many investors could have thought they lost out as the price skyrocketed. Despite the recent market downturn, shares have risen by almost 400% in the last 3 years. Even while some people still think that the leader in artificial intelligence, AI, is pricey, there is solid evidence that this is an excellent moment to purchase Nvidia stock. Nvidia's business has some inherent protection, regardless of whether a trade war speeds up or if tariffs increase prices and impede economic growth. Its software stacks, AI GPU chips, and associated architecture are in great demand and will likely remain so for some time to come. The business is also in a great position to benefit from developments in driver assistance and robots. At a valuation it hasn't reached in over a year, investors can now board the Nvidia train. Based on this year's profits prediction, market fear has caused the price-to-earnings PE ratio to drop below 25. As sales continue to rise, that valuation will become even more attractive if shares stay unchanged. However, investors can be left behind if they wait. If additional sales growth is fueled by new catalysts, investors will buy Nvidia stock again. Now is the moment to start, even though it could be wise to average into the stock gradually during these erratic times. There is worry in the market right now. One of Warren Buffett's most well-known quotes is, "Be greedy when others are afraid." That recommendation should be applied to Nvidia stock by investors as long as its value is strong. The motto that Wall Street has been using over the last 2 weeks is, "Buckle up and hold on." Some of the largest single-session point increases and losses have been seen in the Dow Jones Industrial Average, S&P 500, and NASDAQ Composite since their foundings ever since President Donald Trump announced his Liberation Day tariffs. These extremely powerful companies have suffered during the recent sell-off, whereas the Magnificent Seven equities were in charge of pushing the overall market higher for over 2 years. For example, in the first week of January, Nvidia, the artificial intelligence, AI unicorn on Wall Street, boasted a market valuation of around $4 trillion and momentarily overtook all other public companies as the largest in the world. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Move to the bad news, Bill. Donald Trump initiating probes on chips and pharma as potentially a precursor to more tariffs. Do we know what the scope is here?
Well, President Trump has ordered the Commerce Department to do what they call a Section 232 probe into both semiconductor imports as well as pharmaceutical imports. That gives the Commerce Department 270 days, 9 months, to complete a look at that. Given what we've seen from the administration so far, I would expect it to be done much more quickly. But the normal end result of that process would be new tariffs on that sector.
However, Nvidia has lost 26% of its value as of April 11th, and as much as 36% as of April 8th, after hitting its closing high on January 6th. Some investors may be quick to blame the uncertainties around President Trump's tariff decision for this setback. A succession of rising tariffs between the United States and China could prove problematic, even if Trump has given most countries a 90-day reprieve from greater reciprocal taxes. Despite not importing from China, Nvidia's primary market by net sales is the second largest economy in the world. China may retaliate by rejecting Nvidia's artificial intelligence chips. In the beginning, Trump's Liberation Day declaration also demanded increased tariffs on Taiwan, the location of the top chip manufacturer in the world, Taiwan Semiconductor Manufacturing, a major supplier of chip-on-wafer-on-substrate packaging technology that integrates the high-bandwidth memory required to power AI-accelerated data centers, is Taiwan Semi, or TSMC as it is more well known. Fortunately, the president's announcement this past weekend guaranteed that reciprocal tariffs would not apply to semiconductors or chip equipment. Tariffs are an issue for Nvidia, as is the uncertainty brought about by President Trump's changes to the tariffs' implementation dates and types. Tariffs, however, rank relatively low on the list of issues that present and potential Nvidia shareholders should be concerned about. It is much more plausible that Nvidia's stock is being weighed down by 3 other issues. 1. Competition within the company. For publicly traded companies, competition is almost always an issue. Despite holding the majority of the GPU market share in high-compute data centers at the moment, Nvidia's Hopper, H100 GPU, and its successor Blackwell GPU design are not immune to increasing competition. The majority of investors are most likely concentrating on direct competitors from outside the company, such advanced micro devices. New generations of AMD's Instinct series AI accelerating processors are still being developed, and they are all noticeably less expensive than Nvidia's AI technology. AMD's Instinct GPUs may be a better option for companies who don't want to stand in line for access to Nvidia's AI hardware. However, Nvidia faces an internal challenge that is more serious than AMD and its competitors. Members of the Magnificent Seven have placed several of Nvidia's biggest GPU orders. The issue is that these titans of the business are also working on their own AI chips and/or solutions for their data centers. Although this in-house technology is much more affordable and more accessible, it is unlikely to outperform Nvidia's in terms of processing speed. In other words, Nvidia can keep releasing new AI GPUs every year, and yet lose out on important data center space to its own most valuable clients. Future orders and Nvidia's already declining gross margin will suffer as a result. 2. The past. The potential for history to repeat itself on Wall Street is a second issue that is more concerning than tariffs. Investors have been captivated by the next big thing in technology or innovation for the majority of the last 3 decades. Pie-in-the-sky addressable market numbers linked to a potentially revolutionary technology or trend frequently attract investors. But since the introduction of the internet in the mid-1990s, every next big thing trend has met the same end, a bubble-bursting incident. The reason why high expectations are not fulfilled is that both professional and regular investors frequently overestimate how soon a new trend or technology will become widely accepted and/or acquire significant utility. There isn't much proof that companies are making a profit from their AI investments or have found out how to maximize their AI solutions, despite the fact that we have seen substantial enterprise expenditure on AI infrastructure. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
What do you really think is going on here? We went from having tariffs on this stuff to not having tariffs on this stuff to maybe having tariffs on this stuff to I don't even know what anymore.
Right. And, you know, the trouble, and I'm sure the administration understands this, is that the tariffs coming in would just destroy a lot of demand. There's no way that we're going to produce, assemble iPhones in the United States. So, there's no difference in behavior that would come as a result of that. So we've been very concerned with semis is the demand destruction that would come if you tariff something coming in the U.S., the price goes up, your iPhone cost goes up by $250, you're not going to buy one.
Right.
And so I think that's probably a little bit of the horse trading here. The tariffs on the semiconductors themselves coming into the U.S. are actually a little less problematic because we don't actually consume many semiconductors here. Your iPhone, you send the chip, if it goes from TSMC in Taiwan to China for assembly, then it comes back here. So it's really the tariffs on the finished goods that are the bigger problem for us. But then there's another wrinkle as well, which is what China is doing for U.S. semiconductors. And because China is a bigger market, that's actually a bigger issue for a lot of companies, Texas Instruments on semiconductor, even Intel next year, obviously.
Do you think that the public markets are betting properly on what's about to happen here or not? I mean, meaning going into Friday,
right?
Thought there's tariffs on everything.
Right.
Then we heard Friday night, they're not tariffs on all this stuff. Then on Sunday morning, it sounded like actually there were tariffs on all this stuff.
Temporary and something else, yeah.
And then we thought that there weren't tariffs on all this stuff, or at least temporarily. So how do you sort of gauge where you think this ends?
Yeah, and I think in terms of what stocks are reflecting right now, they're certainly not reflecting the worst case. Again, if you really are going to get tariffs on electronic coming into the U.S., it would be much worse than this. On the other side, it's certainly not reflecting a case where tariffs are. So it's probably somewhere in the middle. And speaking with investors the last week, everybody's head is spinning right now because nobody knows what to do. The other side is, if you think about it from company standpoint, they don't know what to do either. So in terms of changing behavior, you're not going to change behavior on where I decide to make chips, which is a decision that takes 2 years to make. You need absolute certainty of what the policy is going to be in order to change that behavior.
So where does this all go, and who's being properly priced? And is there anybody out there you think is being underpriced right now?
Underpriced, meaning that there's
meaning like the stock is a screaming buy to you.
Yeah, and in our view, the AI space and NVIDIA in particular is at least the best place to hide right now. And I think, in the long term, certainly I think it's very attractively priced. It's around 20 times earnings or so.
Okay, given what you know about this industry,
right?
Walk us just real quick through what NVIDIA just announced. Meaning, is that real? How big an impact is that? What should we really be taking away?
Right. And so what NVIDIA announced is two things. One is that they'd be able to start making some of the chips at TSMC Arizona. I think that is real, and it's one of the things we've called out is, TSMC Arizona can't produce everything. I don't know if it's by luck or by design, but NVIDIA's latest Blackwell chips in the subsequent generation can be done in Arizona. So it makes absolute sense for them to do that. The other thing that they talked about is building the AI servers in the U.S., at least partially. And that makes some sense, too, because the AI server, it's a high dollar value. It's a very high margins. The additional cost of producing that in the U.S. is not going to kill them. They also have an option to do some of this in Mexico as well, where you can bring that over the border in USMCA.
All new trends and technologies need time to develop, and it's reasonable to argue that artificial intelligence isn't nearly there yet. There may not be a public firm that would be more severely impacted than Nvidia if history were to rhyme and investor expectations were to be reset. Appraisal. The third issue is Nvidia's value, which is a far greater worry than tariffs. Nvidia's price-to-sales PS ratio peaked last summer at 42.39, which is comparable to the peak PS ratios of industry leaders before the dot-com bubble burst. This is still twice the premium given to the most expensive Mag 7 stocks in relation to their sales, even though Nvidia's PS ratio has been cut in half since last summer to 21.06. As previously mentioned, Nvidia has also started to roll over its generally accepted accounting principle, GAAP, gross margin. In the fiscal first quarter of 2025, ending April 28, 2024, its GAAP gross margin reached a high of 78.4%, thanks to AI GPU scarcity and exceptional pricing power for its GPUs. Its GAAP gross margin, however, has decreased in each of the last several quarters and is expected to drop to 70.6% in the current year's fiscal first quarter. The company's own faster product renewal cycle and decreasing AI GPU shortage could have a long-term impact on profitability. In addition to decreasing the willingness of current customers to switch to next-generation hardware, Nvidia's plans to release a new AI GPU every year may cause the value of earlier generations of AI GPUs to rapidly decline. Even if Nvidia and artificial intelligence solutions have a bright future ahead of them, Nvidia's stock could perform poorly in the upcoming quarters regardless of the tariff situation. When it comes to the development of artificial intelligence, AI, Nvidia sets the standard by selling the most sophisticated graphics processing units, GPUs, for data centers in the world. It all began with the H100 GPU, which was the finest processor for AI inference and training large language models, LLMs, helping the business capture 98% of the market in 2023. Although these models were helpful at the time, they frequently made mistakes and only produced one-shot answers to human inputs. Nowadays, developers are creating reasoning models that take longer to think through a response rather than bombarding LLMs with training data. Stated differently, they optimize their existing data and eliminate background errors before providing the user with an answer. The GPT-4o series from OpenAI, the Claude 3.7 Sonnet from Anthropic, the R1 from DeepSeek, and the Gemini 2.5 from Alphabet are a few of the top reasoning models on the market right now. Jensen Huang, the CEO of Nvidia, claims that these models demand an astounding 100 times more processing power than conventional LLMs. He claims that because they spend so much time thinking, each response they produce uses 10 times as many tokens, words and symbols. Additionally, because of this, they generate responses significantly more slowly. To compensate for these delays, GPUs must be 10 times faster, otherwise users may become disenchanted with the entire experience. Consequently, the Hopper architecture from Nvidia, which forms the basis of the H100 GPU, is no longer adequate. Nvidia's Blackwell-based GPUs, like as the GB200, which can execute AI inference 30 times faster than the H100, are being used by developers instead. During the GTC 2025 conference in March, the company also unveiled Blackwell Ultra, an enhanced architecture that offers up to 50 times more performance than Hopper. In fiscal year 2025, Nvidia's data center division brought in a record $115.2 billion, a staggering 114% rise over the previous year. However, as reasoning models get more power-hungry, Huang predicts that investment on AI data center infrastructure would surpass $1 trillion yearly by 2028, meaning Nvidia's opportunities will only increase from this point on. Right now, investors can purchase Nvidia stock at a very appealing price. As of this writing, it is trading at a price-to-earnings (PE) ratio of 37.7, 36% lower than its 10-year average of 59.6. President Trump's tariffs on Taiwan, where a large number of Nvidia's chips are made, do not apply to semiconductors. The company does, however, face uncertainty because its growth is fueled by hundreds of billions of dollars in AI data center expenditures from a few number of customers. If trade tensions hurt the global economy, some of those buyers may change their capital expenditure plans. However, given that nations are already discussing trade agreements with the Trump administration, this is probably going to be a temporary obstacle. As a result, investors who buy Nvidia stock now could see significant profits over the next 3 to 5 years.